Hey there, John Hunter, your mortgage hunter, coming back to you again this week with another rate update. This one for the week ending in May 3rd. We ended this week on a positive note for a welcome change. I've been saying all year, it's all about employment. The Fed is going to focus on that, and that this week was no exception. So 30-year fix, 6.875 to about 7.375. FHA, 6.75 to about 7.25. 15-year fix, 6.25 to about 7. VA, 6.625 to about 7.25, and down payment assistance were anywhere from 7.25 all the way up to about 7.875, flirting with 8% there. And remember, guys, this rates are based on loan amount, loan type, credit score, loan to value, whether you're a first-time home buyer, income, whether you fit into like low to moderate income. There's a lot of variables there, as you can tell. And if you want an individual quote, reach out to me. I'd love to help you. And make it make sense for you. So, the takeaway from this month's Fed meeting is that they're still in a downward or cutting or lowering the rates basis. They're not raising. That was talked about a little bit. That's why rates went a little crazy recently. They're worried like, oh my God, maybe they may not only not lower, they might raise. And the amount of rate cuts prediction was cut and whatnot. And then, fast forward to this week, and we had the Fed come out and just reiterate that, but also Jerome came out and basically said, hey, it's not as bad as you think. We are going to cut, we're not going to raise, but we're going to be data-based, and we're going to make our decisions based on that. And then now, what do we get today? We got an unemployment report that, the Fed couldn't have scripted it better. Unemployment came in weaker across the board, really kind of surprised the market. And then we got another report that showed that the services sector also slowed down quite a bit, and it's really helped out the rates, right? Today we saw the markets rally across the board. So, with the Fed saying, they're just going to be data-based, and then we got today's report, which is just a glimmer of hope. Exactly what the Fed's talking about. They're data dependent. This is the data that they're talking about. So these were April numbers. We'll see when we get May next month. The best way to describe it is, it's like the Fed has been on a long plane ride, and now they're just circling the airport, waiting for permission to land. And today was just a little bit of that permission. So they're not going to go off of one report. They're going to need several. But you know what? We got to start somewhere. And today, hopefully, is that beginning. So the market is predicting right now that September is when they're going to do their first cut. I think that if we get a couple months in a row, like next month, showing unemployment being weaker, we get a good PCE report, which is the Fed's favorite report. I think that we could be looking at it sooner than that. I think the Fed wants to do it with the election coming up, and they're just looking for an excuse. So hopefully the market gives it to them. Anyway, hey guys, John Hunter, your mortgage guy, coming back to you every week with rate updates and some other fun content. I've got a great little video that's all about how interest rates work coming out on Monday. So please come back, like, subscribe, and have a great weekend. Talk to you soon. Bye-bye.